welcome back to this week's market update. Today is Friday, October 27th, 2023. We had a very exciting week with GDP coming out, as well as a lot of earnings and other news in the market. So let's jump right in. As we close out the last full week of October ahead of a Fed meeting next week, equities ended lower for the month, and as of close on Thursday, October 26th, we saw the 10-year U.S. Treasury yield gain about 5.5%, while the Dow Jones lost almost 2%, the S&P 500 lost about 3.5%, and the Nasdaq lost about 5.4% on the month. Starting off this week, we got the third quarter GDP report coming in much higher than expected at an annual rate of 4.9% here, and a lot of that can be attributed to higher consumer spending, increased private inventory investment as producers are kind of stocking up on inventory while inflation is still running pretty high, as well as we saw greater exports, greater state, local, and federal government spending, and higher residential fixed investment. So overall, we're seeing a lot of growth in the economy still, despite lots of indicators that may prove otherwise for the economy in a recession to come, especially in this higher rate environment. However, we're not seeing that yet, and that third quarter GDP report definitely showed that for sure. Alongside the GDP report, we also got a pretty bullish durable goods orders report for the month of September here. You can see durable goods orders came in strong at a monthly increase of 4.7% there. Excluding defense, the actual figure came to a monthly increase of 5.8%, and the leading categories of these new orders was transportation equipment, which was up 12.7% month over month, which includes the category of non-defense aircraft, which was up over 90% in the month of September in new orders. So just another layer of confusion into economic outlooks as, we've seen airlines ramp up their aircraft purchasing ahead of what they think might be another strong travel season next year in the face of, other economists saying we're going to hit a hard landing. And yeah, so just really interesting stuff as we take a comprehensive look at the economy, where we are and where we're heading. Also this month, we got the September personal income spending and savings report here, which comes alongside the PCE inflation report. And here you can see that personal income rose about 0.3%, while outlays rose even higher. So despite consumers making slightly more, they are spending even more. And as a result, we saw the personal savings rate shrink to just 3.4% of disposable income here, and that was down from about 4% in the prior month of August. All of this demonstrates another month of consumers not really cutting back, but needing to decrease the amount they save, and in some cases, maybe even dipping into their savings to maintain their lifestyle. So really interesting stuff, and we will switch into the PCE inflation report here that came alongside it. Alongside that personal income spending and savings report we got for September, we also got the PCE inflation report, the last inflationary data before next week's Fed meeting. So really interesting timing there. And it ran just as expected with a monthly increase of 0.4% in that headline number and 0.3% in that core PCE number there, which excludes food and energy. On an annualized basis, we saw headline PCE inflation run at 3.4%, the same as the last 2 months prior here in September, and that core PCE number ticked down slightly on an annualized basis, down from August 3.8% to September's 3.7% here. Behind the data, energy led the greatest monthly increase, up 1.7% in the month. Additionally, total goods inflation rose only 0.2% month over month in September, while the service sector remained hot at an increase of 0.5% month over month in prices. So really interesting timing as we head into a Fed meeting next week, where Powell is expected to announce no rate hike in November, despite inflation running much above their 2% target here. So we will continue to watch inflation closely. Final little recap of the week. We had a lot of earnings come out this week for quarter 3. This week alone, over 20% of the S&P 500 reported, with 79% of those reported companies actually beating their EPS estimates. So this is good news, and the average surprise was almost 10% to the upside there. Big names like Microsoft, Amazon posted double-digit EPS beats, sending those names higher despite the general pullback that we saw overall in equities this week. From those 47% of companies here that have reported so far for third quarter earnings, you can see they rose an average of 15.5% compared to third quarter of last year. So a lot of earnings growth there, which was really interesting because earnings growth was originally thought to be negative this quarter compared to a year ago. And now that has flipped the estimate to be about a positive 3.6% gain in earnings growth year over year. So really interesting stuff in this earnings season, going a lot better than expected so far, and really no signs of a recession in the near term. So we'll keep an eye on earnings and continue to watch the portfolios every week. Thank you so much for tuning in to our market update this week, and we look forward to providing another update next week.